certainly what we heard today is there's no rush to taper. So I think we can be confident it's not in the next 6 months. I think ultimately they will give us some advance notice, but we haven't heard it yet. So, I mean, if they started giving advance notice at the next meeting, then that would say maybe even earlier than early next year. But no, at this point, I'd say there's no sign of that. And certainly based on what he said today, they're not going to be in a rush. They think they're a long way from their goals. And as he said, it's going to be some time before they think they'll get the substantial further progress that's needed for tapering.
It did seem a little tin-eared of Jay Powell to talk about the froth in markets, but not directly connect that with the easy monetary policy that the Fed has been pursuing here. But I'm interested in the reaction function in the markets. I mean, we were becalmed, and then we saw a big move down in the Dow. Why is the market not really responding to Jay Powell's dovishness?
I'm not sure is the short answer. I mean, I think it has already is probably the full answer, in that the markets had a very good run. And I don't think there's any doubt that that's very much tied to the very dovish Fed. So, I mean, yes, well, the bond market rallied a little bit when Powell used his sometime kind of long way from the goals language today, because some people were worried there would be a taper countdown signal effectively, and we clearly didn't get that today. But it doesn't seem to have done the stock market much good. But that said, even the bond market didn't move all that much. So it wasn't a big surprise, I would say, today.
Jim, I want to pick up on those comments about setting the clock for exit, because some also believe it could come next outing, that this may be the last one where you see this ultra dovish commentary before we start spelling out the route to exit at this point. What do you make of that, and what's the market reaction when we eventually do start to get some clues on how we unwind policy? How will the market react this time around?
Yes, well, I would say, I mean, I don't think it's going to happen at the next meeting or the meeting after that. I mean, obviously they've talked generally about needing to see substantial further progress toward the goals, and the goals are maximum employment and the 2% inflation goal as well. So they need to see both. And they're preparing us to see some pretty high inflation numbers over the next couple of months because of base effects, because of reopening effects. And they're suggesting that they'll be transitory. In any event, it'll take time to determine whether they're transitory or not. So really it's going to be, I'd say, the fourth quarter before you have a better sense of how much of whatever strength we see in the next couple of months is transitory. And then on the labor market, Powell kept emphasizing that we're still down 8.4 million jobs. So even if you got 900,000 a month, as we saw last month, that still wouldn't make much of a dent in that number for several months, I would say. So I don't think there's much risk of a taper countdown signal coming as soon as the next meeting, certainly, or even the one after that, probably. I mean, I think it's going to be later in the year before you see it.